everyone? It's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is November 6th, 2019. Shout out to my man Tech Geek out there on YouTube for the song request. I might have to send him some merch, man. He's sending me more song requests than anybody right now. This one is from Mims Move. He said that was a nice interview y'all did. Thanks, man. I appreciate that. I had a great time with Mims. I was actually kicking it with him afterwards, man. Really cool dude. Definitely have to have him back on the show in the future here. But what's good? Hope you guys are doing well today. We're gonna get right into it. We're gonna be looking at something I never covered this, but I was keeping my eye out on it. The Kimcoin. I don't know if you guys knew about Dotcom rolling out his own coin, and I didn't even look into the project, but I knew he was rolling something out. I saw him on Max Kaiser's show maybe a month or so ago. And yeah, it looks like he's now calling that whole token sale off. He's concerned about regulatory issues. There we go. That's what happens. This regulatory stuff really stifles the growth of new burgeoning industries and technologies. But that's what it is. So we'll take a look at why he decided in detail from Decrypt Media. Second article was out of Cointelegraph, and this one I saw yesterday after I did my video. China is scrapping plans to ban cryptocurrency mining. This was actually in the plans to do this, and they're kind of reversing their take on it. Is this bullish for Bitcoin? This is how Cointelegraph is spinning it. I actually don't think so. I'll let you know why. So we'll take a look at that. And this one from CryptoVest caught my attention. New research, and it's from the same guys that put out the research back in, I want to say, early 2018. And you guys probably remember this infamous research. I did a video on it as well. But these two guys said that the whole rally from 2017 was caused by Tether. I didn't believe them then, and now I guess they don't believe themselves either, because now they have a new reason, and their new research basically shows that it was one single whale that moved the price of Bitcoin from its lows, I think around 3,000 all the way up to 20,000. It was one whale, they say. New research shows. You might be surprised. I actually believe this one over that whole Tether conspiracy. I just didn't believe that, and it wasn't, man. I really don't think Tether was just utilized to offer and add liquidity to the markets. What I mean by that is, I guess you could say it indirectly assisted in the rally, but it did not cause the rally, if that makes sense. Tether, and I see people in the crypto community say, "Oh, Tether just printed more money. Here comes the manipulation." No, they print and destroy money based on supply and demand. So it's a reactive thing by the Tether Mint, not a proactive thing by them, if that makes sense. So yes, you're going to see Tether being printed if there's a new demand for it, essentially, and then people will take that and buy various crypto assets. It's a supply and demand for Tether. So then when the actual exchange running out of Tether or whatnot, they'll go and issue more from the Tether Mint. It's just, it's funny when I see people say that. But anyway, we'll take a look at this again. I probably would believe this story more than their previous one. And again, don't forget, every weekend I'm doing the new series, Ask the Block. It'll be episode 7, I think. Wow, episode 7 this coming weekend. Get your questions in. #AskCB, and I will add it to the list. I'm doing about 7 questions an episode, so I'm just going down the list as I get them. So make sure you guys get those questions in there. And also, I tweeted this out, but didn't mention it on the channel. This last month's performance for the Bitcoin or BitMEX algo, my proprietary algorithm for trading Bitcoin and Ethereum on BitMEX exchange, is available. All you have to do is go to cryptoblood.io, either click the Halloween promo that I haven't taken down yet, and to be honest with you, tell you a secret, that promo is still active. I'll make sure I turn that off after today. But under the chart that shows the equity curve, you'll see a red button there where you can see the monthly performance reports, and you'll be able to check out last month's trading performance, detailed trades in and out for each of them. It's a spreadsheet, Excel spreadsheet that you can check out. It has every trade, win and losses. You guys get a feel for this algorithm if you want to try it out. Again, cryptoblood.io. And so at this point, P&Ls for since start is 11,486 bucks. But that's off of trading 10,000 contracts in BitMEX. So you can change that. You can kind of come to your own P&Ls based on whatever you trade. But I have it set at 10,000 contracts, so the math is easy for you to derive, you know, where the performance would look like if you were trading your lot size, whatever that may be. If you're trading 20,000 per trade, 30,000, you can just multiply that P&L by that number. Or if you're trading less, you would divide that, right? So, but let's take a look at this heat map. We're down 0.5% today in Bitcoin to 9,295 bucks. Ethereum is down as well to $189.15, down 0.38%. Binance is down 0.5% to $20.54. We've got EOS down slightly today, 1.6% to $3.56. Litecoin also down just slightly to $63.19. Algo down 6.7%. I told you guys this thing moves. This is one volatile crypto right here. It was up 17% I think yesterday. Now it's down 6%. So if you pick it, if you get it right on that one, you can make some money trading algo. So technically speaking, we're still inside this pennant, guys, even though we've taken a move back since yesterday's little move up towards the 9,400 area. We are still inside of this pennant, so I'm not concerned yet. As you can see, I'm just going to delete this green area so you can clearly see that pennant between the turquoise and red line. We're still in between there. So we're going to inch on up, hopefully to the upside, but we could break down as well. You just have to be reactive in trading. So if you're long, you want to have your stops below this trend line. If you're looking to go short, you want to have your stop sell orders below here, and you'll catch it on the way down. And if you're net neutral in Bitcoin right now, you're looking to get in, but you think it's going to go up, you just have your buy limit orders above this red line, 94.63. And if it breaks out, you can possibly catch that wave up. And you know, you'll catch the wave on up if we head that way. Be reactive in trading, not proactive. But the first article out of Decrypt Media, let's take a look at it. Bitfinex/Kim.com calls off Kimcoin token sale due to regulatory concerns for undisclosed legal reasons. Bitfinex and Kim.com team have mutually agreed to indefinitely postpone the sale of Dotcom cryptocurrency Kimcoin. You guys don't know who Kim.com is. It's the infamous dude that had the mega uploads or mega brand online years ago. It was a big, almost, I think it was like a torrent site of some sort. You can download all types of stuff, music, software, whatnot. But yeah, he is the person behind this Kimcoin. It says Kim.com, the father of the file sharing, copyright infringing mega upload, won't be launching a blockchain token for his new K.im project after all, at least not anytime soon. It says today, Bitfinex, the Hong Kong-based cryptocurrency exchange currently battling a fraud investigation launched by the New York State Attorney General's office, announced that the Kimcoin token sale has been halted due to regulatory uncertainty. Bitfinex and the Kim.com team have mutually agreed to indefinitely postpone the sale of the Kimcoin. According to a statement from Bitfinex, K.im will defer any decisions on whether to create tokens on or undertake a token issue in relation to the K.im platform until it is fully functional. It goes on to say here by a Bitfinex spokesperson that in the meantime, the K.im platform project itself will continue, and it is likely that an equity-based offer will be made sometime in the near future to qualifying investors who wish to become involved at this stage of the project. It goes on to say that Kim.im is a platform where users can monetize files on their computer hosted on cloud services like Dropbox and sell them. In the demo provided by Decrypt Media, it was trivially easy to upload copyrighted content to the platform and sell it for $100. Kim.com, who previously went to prison for issues relating to copyright infringement, told Decrypt Media that the platform would sort out those issues. However, K.im was designed in such a way that it prevented the administrators of the platform and hosting services like Dropbox from determining the contents of the files. So there you have it, man. You know, this brings up actually a good question I posed to you guys. We all talk about decentralization, autonomy. What does it look like when we're talking about a world where you can upload anything, share anything without any censorship? What does that look like for copywritten material? These are the hard questions that have not been solved. I don't know how they will ever be solved, because you almost need a middleman or a third party to, you know, kind of mediate those types of things. Any type of copyright infringement issues, you'll have to have a third party that dictates what's right and what's wrong. This is something that's it's going to be a huge problem going forward. I guess what I'm saying is that maybe having a fully autonomous, decentralized infrastructure is a pipe dream. It just won't work in the real world of capitalism. You know, people having digital rights over certain software and, you know, all types of stuff. So I don't know. Let me know in the comments below, what do you think and how do you think those types of issues can be resolved? Because if it's a free-for-all, you know, it sounds good, but if you're on the other end of that, if you're a content provider or you create some type of software and you put millions of dollars into it and then people can just upload it and share it, you know, I don't know. You guys let me know your thoughts on that. But interesting to see that K.im has postponed that token sale. Second article, Cointelegraph. Bullish for Bitcoin, they say. China scraps plans to ban cryptocurrency mining. Let's see how they're spinning this, people. Bitcoin mining will not face a state crackdown in China, authorities have confirmed in new official documents, as noted by Blockstream SCO Samson Mao and others on November 6th. Mining no longer features on a list of industries Beijing considers undesirable. Probably not. Of course not. They want to corner the market more. China's already over 51% of all mining hash power for Bitcoin. So why would they stop that? They're cornering the market in Bitcoin and continuing to take over and hold Bitcoin hash rate hostage. The change came via a new edition of China's Industrial Structure Adjustment Guidance Catalog, which will take effect from the start of 2020. China's National Development and Reform Commission has removed hashtag cryptocurrency mining from the list of industries that they want to eliminate. Bullish for Bitcoin, Miles says. I don't know about all that, people. Article goes on to say that the recent endorsement of blockchain technology from President Xi coincides with the dramatic rise in Bitcoin's price, after which local media cautioned on misinterpreting the remarks as supportive of crypto. Following the most recent announcement, however, little appeared to change on Bitcoin's market. And the reason is, I'm just going to tell you right now, the reason nothing changed when this news came out yesterday is because this has nothing to do with Bitcoin prices, at least. Mining is actually an inflationary event. Even though Bitcoin itself is deflationary because there are a set number of coins that will ever be produced, the act of mining is actually an inflationary event because it adds supply to the network, to the exchange, to the blockchain. So China allowing that operation to continue is not necessarily, it's not good or bad for Bitcoin. It just is what it is. It just lets us know that they're going to continue to again hold Bitcoin's hash rate for hostage and control yet another industry. It's yet another industry that China controls. You can stay delusional all you want, and it's funny because now I'm putting on my tinfoil hat. What happened to Are We Decentralized Yet.com? This site is no longer up. It used to be a great source for you to see exactly what coins and how centralized all of these coins have been, to be honest with you. Don't know what happened to this site. Was a great resource. for me to be able to illustrate to you guys, because many times we focus so much on price and we're not even looking at the actual technical side of things when it comes to these technologies and these blockchains. But don't know what happened to that site. Did Blockstream pay them off to take it down? We don't know. I'm just throwing stuff out there. I'm not saying, not saying that's the case. But 51% of their of Bitcoin's hash rate is controlled by 3 entities. And those 3 entities actually are all in China. Go figure. Bitcoin is not the only one, though. I'm going to stress that. There are many other coins. Actually, Ethereum, Litecoin, all of the actual cryptocurrencies are very centralized when you look at it from the aspect of hash rate or hash power. Very centralized. I wish I had that site up, but again, who knows what happened, who got paid off, if that is even the case. Just throwing stuff out there. But interesting to see China turn the green light back on for Bitcoin mining. I think Bitcoins or trading Bitcoin and cryptos are still illegal, but you can mine it. That lets you know something. Bitcoin's 2017 rally was caused by a single whale, research shows. A series of $1,000 days that brought Bitcoin to a record of above 19,600 could have been the works of one entity, academic research shows. The great wave of FOMO of 2017 may have been sparked by a single whale entity, causing a concerted climb for Bitcoin, reported Bloomberg. It says that BTC started to rally in the early spring of 2017, as we all know, but accelerated its pace in the last 3 months of 2017. And I just have to interject there, many of you out there, unfortunately, are still chasing that high, that euphoria that you saw back in 17, still holding on to those bags, those dead shit coins out there. You know which ones I'm talking about. Well, there's a lot of them actually, but you guys are holding on, praying it's gonna come back to you, Lord. But anyway, before entering the year-long bear market, a new paper has looked at data from the biggest BTC rally in history. John Griffin, University of Texas professor, and Amin Shams of Ohio University are known for pointing out the connection between Tether printings and the rise in Bitcoin prices. Again, that was their first little duo research paper they put out. I was calling it bull back then, but everyone at that point was saying, yeah, that's why, and blah blah blah. And this was in 2018, so people were feeling salty, wanted to blame it on someone or something. But the duo said our results suggest instead of thousands of investors moving the price of Bitcoin, it's just one large one. Years from now, people will be surprised to learn investors handed over billions to people they didn't know and who face little oversight. In their past paper, the academics linked Bitcoin price rise to Tether printing. In their new research, however, they noted that the price action was happening on a single exchange and seemingly from a single account. This matches the observations that a single source of orders on Bitfinex was a cause of Bitcoin's price action, which created cascade effects on other exchanges. In 2019, there were much rarer occasions of Bitcoin price rallies. Still, the pattern of sharp and immediate price climbs seemingly out of nowhere add to the observation that lifting the price of Bitcoin may be a concerted effort. So so now they're saying it's just Bitfinex, parent company of Bitfinex. Like I said, I can believe that more so than them saying it was all these Tether conspiracy, that Tether was to blame for it by thousands of different exchanges in a concerted effort to pump up the price, like some conspiracy that way. I didn't see that, because you have to remember, like cryptos and Bitcoins, this is not the equities game where it's one exchange and only one exchange that these types of financial assets can trade. On equities, there are dark pools that exchange equities and stuff, but it's still, in general, it's easier to manipulate the price by a group of individuals together versus when cryptos, in my opinion, it's more so, it's so fragmented. There are so many different exchanges to get everyone on board to do something in lockstep. It just doesn't make sense. So to see them say that, hey, maybe some one account over at Bitfinex, and that doesn't necessarily mean that it's Bitfinex. It could just be someone, well, that has an account at Bitfinex was pumping in money. Doesn't have to. How does that mean that it's Bitfinex or iFinex that's behind it? To say that one account started the rally and then it was a chain reaction, like everyone was suffering from FOMO and just bidding it up, possibly. I could see that more so than their previous theory. You guys let me know your thoughts on that, though, in the comments below. That's pretty much it, though, ladies and gents. Shout out to my man Tech Geek out there on YouTube for that memes move song request for today. Make sure you guys like, share, and subscribe, and click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood. I'm out of here, people. How? Understand how I can have so many haters, knowing I'm